This is coming from a research piece I received from TD Securities yesterday. But you're looking at anywhere from roughly 300 billion to 500 billion dollars, with, if you will, of inflow to the US Treasury, right? So on $37 trillion in debt, that's a drop in the bucket. But what would this do for the kind of the next, like the short term, what you're doing with your financial house, getting your affairs in order? Um, this would be a massive kind of like cash inflow into the Treasury's purse. And in terms of order of operations, right? We talked about get one big beautiful bill passed. If you're taking this from the Republican perspective in Washington D.C., which is holding the keys to power right now, right? You get one big beautiful bill kind of passed, signed, etc. You get the rate cuts, then you do this, right? And this brings in anywhere from like on the first order impact, you raise you know, in the ballpark of half a trillion, right? Which is doesn't solve your problem, but it's a big inflow. And then you can continue trying to get the your house in order from a spending standpoint. And then the last shoe to drop here on this front. This is where we're trying to put all the pieces together and make sense of this narrative. If you're watching us at this point, one of our few followers, you're probably already kind of favorable in terms of your outlook on Bitcoin. You see it for what it is as a kind of a sound money, open, public, immutable ledger. But the tea leaves are already there on where this is going. If you look at the filing yesterday, or the policy communication from the FHFA chief, who really oversees Fannie and Freddie, he says prepare to count crypto holdings in your mortgage underwriting process. So what does that mean? Up until this time, like let's say you held Bitcoin as a U.S. household, you're a taxpayer, great, you're paying capital gains on it, whatever. But from your mortgage underwriting, I think there's countless individuals here across the U.S. who have gone through this experience. When you go through your application process and you're listing your assets, you're listing your income, you're showing your W-2s, it's a long process, right? To obtain a mortgage, right? That would be Fannie or Freddie compliant. It can get bundled, packaged, and stamped with the guarantee from these GSEs, and then plugged into a mortgage-backed security and works its way into the kind of the U.S. credit system. They've been given guidance that they're going to start counting Bitcoin holdings in that underwriting process as an asset, where it used to just go down as a zero, right? Now there's some caveats here. They want it to be custodied with a qualified custodian, so you're self-custody on your own keys. Looks like that will not be accounted for, taken into consideration, which you're balancing trade-offs here. But what this represents, like to get the credit, right, to get yourself into 30-year or 15-year mortgage, to get you in the house, they're now going to acknowledge Bitcoin, but they want it to be parked with their regulated qualified custodian. So that's the trade-off. But what they're telling you is they said the quiet part out loud. They want to see Bitcoin in the collateral layer of their dollar credit underwriting that's taking place.